So, as Mark indicated, the topic of my talk is Simon's been talking about mining studies and completing good, robust mining studies. And obviously, when we finish those studies, we report them to the market. We report them to potential investors. We report them on the exchange, or companies who are going to market obviously would put these together in an IPO document. And my question is, how do we know that those studies have been completed in a robust way? How do we know about or form confidence in the accuracy of the work that's been done and the results that have been reported? And when I say we, I mean both those external to the company as investors, but also even within the company structure, people need to have confidence and assurance on those resources and reserves and outcomes of the studies. So I'm going to talk to you about what do I mean by assurance on resource and reserves, and I'm using the word resource reserves. It could be a junior company with exploration results, or they could have developed, you remember Simon had a diagram of moving from discovery and exploration results to resource and reserves through technical studies. So we're going to talk about primarily resource and reserve reporting. Why is it important to have that assurance? We'll talk about that. And then I'm going to talk particularly about reviews and audits and what they mean for reporting. So what do we mean? So basically, we're talking about technical assurance. How do we have assurance on the results of exploration, resources, and reserves? And why is that important? Well, for MOG companies, mining, oil, and gas companies, resources and reserves are their key assets. So we need to have confidence in those reported results for those products. And assurance over what? So obviously the information we collect, the data and information, we need to have confidence in that. The estimation or generation of the resource reserves, which is the process. And then ultimately, how do we report those to the market in a clear, transparent, and meaningful way? So any assurance process that we have over that reporting, we need to assess and manage any risk that those results on resource, reserve, outcomes of studies, any risk that they may be incorrectly generated or estimated, or any risk that they might be incorrectly reported. Because you could do the work well, but somehow in the chain of reporting, report them incorrectly or ambiguously. So the assurance, as I say, is over to prevent against incorrect data, interpretation, estimation, and reporting, because that information can impact on decisions we make. Valuation decisions, business decisions, and ultimately for the companies involved, it could affect their reputation in the market, which also obviously has value to those companies. And when we're talking about managing our risk, I'd like to quote this gentleman, Jim Joy, who comes from a safety environment, but he talks about that the level of risk is determined by the quality of controls. So what do we mean? We mean that in the way that we collect information and data for a resource company, the way that we generate resource and reserves and the way that we report them, we need to make sure that we've got checks and balances, controls basically in place. And it's the quality of the controls we have in place to provide assurance that's really important. So the quality of controls. So what are we going to look for in a company that we're assessing in terms of their reporting? What should we expect in a resource and reserve assurance process should that company have one? Well, number one, the purpose for having a structured assurance process is to give the board confidence and assurance in the accurate reporting of their resource and reserves for their company. So basically that assurance process should support the corporate governance and add to and beef up the corporate governance of that company. Obviously the assurance is there to ensure the accuracy of the reported resource and reserves, so that's its ultimate goal. But a spin-off of the process of providing assurance should also be to provide improvement, knowledge sharing, improved information, capacity building of the people doing the work, so that there's a framework of continual improvement in the way that the work is done. That adds value to the overall process. Rather than just being a compliance process, it actually becomes a learning and information knowledge sharing process. So those would be great elements. So what do we normally look for when we're looking for a reliable resource and reserve assurance process? What are the three important elements that you would expect to examine and look for in terms of robustness? Well, the three main areas are people, processes, and systems. If we've got the right people, the competent people, the experienced people performing the work, if those people are using the correct processes for estimating, interpreting, and reporting, and if they're using correct systems in terms of software, hardware, databases, security of information, then ultimately that should provide assurance on the outcome and the accuracy, reliability, and of course the repeatability of the process. Because it's not just important for us as to how well the work is done today, it's whether if those people repeat the work tomorrow or in 6 months' time or in a year's time, can we expect the people to come up with the same results, the same reliable results? So that's the repeatability of the process is important as well. So often in assurance, we're looking for those three elements to be covered. So why is it important that we look at the assurance that sits behind the resource and reserve reporting of the companies we deal with? Well, Simon's already indicated mining is an inherently risky business. That's just a fact. And obviously the market needs, so that's us in the room, we need transparent, consistent, and balanced reporting on that project's technical data. We need to understand the confidence and the reliability of that data. So we understand that risks and opportunity exist. We want to understand what they are. And incorrect reporting doesn't help our case. You already saw the value pyramid that Simon put up, so I don't need to explain again that underpinning the valuation of a company is typically that confidence we have in the technical data, the resource, the reserve, and how we use that information to inform our valuations. I've included in the bottom right-hand corner that diagram from the JORC code about mineral resources to ore reserves, just as a reminder that of some of the terminology. So one of the reasons I'm talking about the need to both check and follow up on whether companies have a good assurance process in place is partly because in the work that people like Simon and myself do, we see examples of poor reporting or poor generation of resource and reserves. And why do we see that? Well, in the current climate in the past several years, with the economy being a bit tight and the minerals industry being underfunded, we find that one example is there's fewer staff doing the work. Fewer staff means they've got less time to spend doing the work. What we've also found with the turnover of staff is that we've got inexperienced staff. So we've got people tasked to do certain work that they're not actually experienced to do. And that's not in itself a problem, providing you've got supervision by experienced people to supervise and mentor and review and teach. But there seems to be a lack of mentoring going back to there's fewer people with less time available. And so what that leads to is a lack of peer review of somebody to review, comment, help improve the way that work is done and the way that resource and reserves are reporting. So those are just some of the issues we see as root causes for why we find some inaccurate reporting. So let's have a look at, number one, what we would expect of companies to provide us with that assurance, or what could be done to improve that assurance. So number one, I mentioned that assurance is required for the board, for senior management, and for external stakeholders over the processes that are applied for collecting the information, using the information, and reporting the information. And that doesn't just include the results we see for resource tonnage and grade and reserves that we feed into our valuations, but also the other key inputs. We call them in the JORC code and other reporting codes the modifying factors. So modifying factors can be mining technology, techniques, mining methods. They can be environmental assumptions, financial assumptions, etc. We call those modifying factors. We need to be confident on the inputs that go into our studies in order to be more sure on the outputs. So if you remember with Simon's presentation, he spoke about the different levels of study, from scoping to pre-feasibility to feasibility and then to definitive. So that's improving reliability and accuracy on the information. The assurance process is, how can we be sure, how do we ensure that we've got the correct confidence in our data? So again, just to reiterate what we said before, any assurance process we have must assess and manage the risk of incorrect generation or reporting of our data. So where are those elements, where would we focus in a company to ensure or to check that they have the correct levels of control in place? Well, if we think of it in this way, there's 3 layers of typically where the work is done or the work is reviewed or the work is reported into the public. So at the bottom of that pyramid, I've got the practitioner, the person doing the work, and or the department doing the work. So that's the person who's collecting the information, who's modeling or estimating the results, and generating the first report of, for example, resources and reserves. Whether the company is large or small, there's typically an oversight of some supervisor or manager over that process. And so there's an internal reporting of the results that first gets assessed before it goes public. Above that, those results would then go, for example, to corporate, to the board, or to people preparing public reports or public reporting documents. So there's external reporting. So each of those layers provides an opportunity to have controls in place to provide assurance on the accuracy of the information. At the level at which the work is done, at the next level where it's reviewed and assessed, and at the ultimate level as it's prepared for public reporting. So we find that many companies have quite robust assurance processes in place for non-technical matters. So whether it be for legal or financial reporting or environmental and social reporting, we find that companies will be able to articulate, to actually show you what is our corporate governance process and our assurance process over non-technical matters. And the question is, what about our technical matters like exploration results, resource and reserves? We should be able to demonstrate and expect the companies we work with to demonstrate that they have a robust assurance process. And in fact, we would expect that companies should be able to disclose to stakeholders, to us, that they have adequate assurance in place over their reporting. If they can't actually provide you with an assurance framework, then the question should be asked of them, how do they provide that assurance to us as external stakeholders? So just an example of the kind of things that we see in industry and that could be applied is there's an International Institute of Internal Auditors. And basically they look at these kind of matters about the systems of controls that are in place to provide assurance on reporting outcomes. And these apply, for example, to non-technical areas, but can equally be applied over our technical reporting. So they call their model the 3 lines of defense. And typically their first line of defense is management control. What is in place, if you like, over the work that's been done to ensure that it is reliable and accurate. Above that first layer of management control, there's what they call oversight functions, a higher level of review established by management as what they call the second line of defense. And then we have independent assurance, which are people outside of the work being done or the reporting who provide a review that provides a third line of defense. So often when we look at companies, or even companies themselves report, and often refer to 3 lines of defense, whether they're referring to the Institute of Internal Auditors, 3 lines of defense, or their own, They typically recognize that there's 3 layers of control. So if we go back to the pyramid I had, you've got the person doing the work, the practitioner, the front line where the work is being done, and those people would have some form of internal self-assessment. There's checks and balances they put in place before they pass the information on or share it. So that's a layer of control. There's typically a peer review process, hopefully, where a colleague or somebody else, if they're doing something new or for the first time, should be able to assess and comment on whether they've done the work reliably and accurately. So you might call that the first line of defense. Second line, remember, we had supervision, oversight. So that oversight offers another layer of peer review over the work that's been done. And then independence at that line of corporate oversight can provide reviews and audits over their level 2 and level 1 lines of defense. So just adding some more words to that, that first line of defense could be the peer review of technical work at the time the work's been done, so before it's been prepared for internal reporting or at the time of internal reporting. The second line of defense is that oversight, so basically technical peers but one step removed from the process provide a peer review process looking at procedures, processes, etc. And then the third line of defense is typically what we call an independent review or an audit, and I'll talk about the difference in my view on reviews and audits. But generally that's independent means that they don't have a vested interest in the actual work being done. They're removed from that actual process. They might be internal to the company but independent of the project, or they might be independent and external. They've come in from outside at the request of the company. So let's just talk briefly about peer reviews and audits. For those of you, so the MOG companies here on the stock exchange report under the JORC code. In JORC code table 1, which has to be since 2012, accompany any first-time reporting of resource and reserves or exploration results, that actually asks the question in table 1 at the end of each section, whether it's exploration results, resources, reserves. The last question in the table for each of those sections is, have there been any reviews or audits completed over this area of work? Ask the question. And the JORC code requires an if not, why not answer. The answer isn't yes or no. The answer is yes, and what did I do? Who did it? What did they do? What were the outcomes? That's what we would expect to see under our JORC code table 1 reporting. And I must admit myself, if I'm doing a review or a due diligence on a project or reviewing somebody's technical report, one of the first things I do in order to get a quick overview of my level of confidence in the project or the study or the report is I turn to the back and I look for the risk section. Simon spoke about the risk review. Part of the risk mitigation is, has there been reviews and audits? Who did them? What did they do? What did they find? How well have you complied or responded to the outcomes of that review or audit? So I often go and look for that to see if there's a shortcut for me as to who's already done the work. What did they think of this project? What did they think of the controls in place? So reviews and audits used for many different purposes, as I mentioned, and under JORC code we expect to see those again. So I won't go through all of those, but reviews and audits are used to underpin many aspects of reporting, to provide an independent review or an internal opinion to stakeholders on these different topics. So just to remind you again, so whether it's a peer review or an audit, and I'll talk about the difference in a moment, basically it's part of the risk management and control process that you would expect a board or senior management to have in place. So reviews and audits to provide assurance over their reporting, their technical reporting. And if a company has a process of reviews and audits or a assurance process in place, it means that that company has recognized the importance of resource and reserves to the company in terms of its reporting. Fundamentally, they're really important. It also recognizes that the process basically requires accurate information to meet not just internal standards, but obviously public reporting obligations. And as I've mentioned before, is if we use peer reviews and audits effectively, they're not simply compliance tick box exercises or what we call sticks to beat people up with. They're actually a way to provide learning opportunities and improvement. So just terminology-wise, what do I see as a difference between peer review or an audit? So in most resource companies I work with, they see peer review as a technical review of work that's done pretty much at the time the work is done. So I use the word concurrent. So basically, while the work is being done, have a peer review process that at key stages reviews and checks the work that's been done. Why at that time? Because then normally in the workflow there's an opportunity for that person or the company or that process to actually implement improvements before you end up reporting them through the company. Often a peer review requires or includes a verification of the information. So how accurate is the information? Where did it come from? An audit, though, in the companies that we review and work with, generally is backward looking. It's retrospective. So the resource and reserves have already been estimated. The competent person's report or technical report has already been completed. It's done. You can't change it. And an audit looks backward at, so what did you do? So how did it go? Is there an opportunity to have done it differently that you could apply the next time you do it? So an audit is a point in time, backward looking, typically, statement. And I think it's the same in, for example, financial audits in annual reports. The work's been done and the auditors have provide an opinion on how well the work was done. Can't change it until the next time you do that work. So remember that, and this is a statement from this gentleman who I'm quoting here is an internal auditor and had been for one of the major companies. But he talks about that the primary purpose of any audit is to provide assurance. So assurance over internal controls. So an audit is not necessarily looking at the detail of how the work was done. It's looking at what controls did the company have in place. Level 1 line of defense, level 2 line of defense, level 3 line of defense. What were the controls? What's the quality of controls? Remember the statement by Jim Joy? Managing risk is about the quality of controls in place. So an audit should think about that, whereas a peer review is more technical. And there's two parts of a process or a control process when we look for how well the checks and balances of the control processes are applied. Is one, have they been adequately designed and fit for purpose? So you can have an adequate process that if you do this, it will provide you a good control or a check and balance. But the second part to it, you can have an excellent process but not apply it properly, right? It can be ineffective. So you want an adequate control process and it must work effectively. So we've reviewed companies, I've reviewed companies where they have a really good control process. They say basically, for example, the person performing a resource estimate must engage a peer reviewer, and the peer reviewer must provide these concurrent technical reviews. But if they don't do that, then it's ineffective, right? They've got a process, but they haven't followed it. So we need to look at both of those to provide assurance. And as I say, ideally, the other benefits are that you provide recommendations for improvement and over time corrective action to ensure that it's done effectively. So the question is, do all companies do this? And the answer is some do better than others, and some there appears to be a gap in their processes that we can expect to be improved. So why do we have these gaps and opportunities to provide better assurance? Well, individuals are often nervous or suspicious of anybody coming to review them. It's a natural tendency. I don't like people looking over my shoulder. I don't want people to tell me I've done something wrong. Well, how are you going to learn if you don't allow people to point out opportunities for improvement? In our work as consultants, internally within our company, we have a process of internal peer review. When we provide a quotation or a proposal to a client, one of those line items in our proposal is an internal peer review process to provide quality control on the work we do. And we actually cost it. We put a cost to it. We name who the peer reviewer will be, or more than one peer reviewer, what the cost will be, because we see it adds value to the outcome. So we do that internally as consultants, we welcome peer review. We don't shy away from peer review. And quoting that internal auditor again, who I quoted on a previous slide, his comment was that in reviewing minerals companies, the mineral resource and ore reserve processes are surprisingly underrepresented in companies' assurance systems. So that's a weakness in the way that our mineral companies report. The other reason that we should expect companies, boards, senior management to have a very clear and transparent assurance process on resource reserve generation and reporting is that more stakeholders are becoming more interested in non-financial areas of reporting, right? If you invest in or following a minerals company, its assets are its resources and reserves. So you should want to know with confidence that the work being done and the results being reported are as accurate and correct as possible. So let's just give some examples of companies performing this kind of work. So, for example, Rio Tinto is very transparent about its resource and reserve governance, and on its website and in its annual report, you will find a page or two of description, and they actually say that they have 3 levels of resource and reserve governance, and they go on to describe them. So, in their view, a lot of for example, this ore reserve steering committee they have is mandated by the board to provide oversight on resource and reserves, both the competent persons doing the work as well as the standards. And you'll see there's even an EXCO committee. So right at the most senior level of the company, the ore reserve steering committee reports to the EXCO from the board to independently provide information on the different product lines, so iron ore, copper, diamonds, etc. And then the board audit committee, so again at a board level, they actually have annual reviews on resource and reserves at that group level. They have a resource and reserve audit program similar to the one I described, and they also have an internal audit and assurance function, which is the third layer of defense, that provides oversight over the whole process. So Rio Tinto is one example. But several other companies in the public domain talk about their assurance processes. Atlas Iron, Goldfields, Anglo American, and many others have examples. And I'm just quoting this one again of Atlas Iron off their website. So they talk about that they also have the steering committee. It provides oversight. The committee includes representation from geology, operations, mine planning, etc. They talk about rigorous governance and sign-off processes. So underneath that, presumably, we'll find those controls. And they also say that they have that third line of defense, which is the auditing by external, in this case, external consultants. And then they talk about the internal systems and controls just at a very high level. So if a company, for example, puts out a statement or a policy like this, you could easily, as an interested party, an investor, or somebody who's they relying on to take their projects forward, ask them for more details underneath this policy statement. If they say they're doing it, what are they doing? They should be able to come forward with more detail. So it's we see more and more of this in the industry, which is really useful. So just to sum up, I put up the same slide there with the chain, the links in the chain and the weak link that Simon had. Again, because if we think about, remember, people, processes, systems, and the detail that underlie those, we want those to be all strong, to provide accurate, reliable data for public reporting that people can rely on in terms of assessing the company and valuing its projects. So a system that includes peer reviews and audits and, for example, at those 3 layers of defense, those 3 lines of defense, will provide really good corporate governance over technical items, so assurance over accuracy. It'll provide opportunities to improve, technical improvement, which is good for improving capability and competency in staff, and as we mentioned, that mentoring. And it's particularly important at this time, as I mentioned before, where we find that companies are sometimes running lean, so time-poor teams. They might be slightly inexperienced in the functions they've been asked to do, and there may be limited time for technical or management oversight. So investors are risk-averse. They want assurance over these processes, and obviously regulators more and more are looking for evidence of self-regulation. So being clear and disclosing what they do over resource and reserve assurance is about self-regulation. And I just remind you that it's fair to say that if a company doesn't have or doesn't disclose a clear resource and reserve assurance process, you should be able to ask them what they do to provide assurance over reported resource reserves. If you don't have a control process, then how do we know that you have accurate reporting of your results? So, in conclusion then, a resource and reserve assurance system, typically of stage reviews and audits, provides increased levels of independence and objective assurance over resource and reserve reporting. It means that we have a systematic and disciplined process that's repeatable, auditable, and that provides us with a level of confidence. Importantly, the senior management and board can then have assurance over their own internal processes, and often we hear that question being asked from boards of their technical staff: what are you doing to provide assurance over the reporting before we report it? And of course, if you are following responsible management of any resource project, you would expect that over the full life cycle, from discovery to resource assessment to operation, you need competent and dependable controls over that process. And really, that should be led from senior management and the board in order to provide that guidance and support for the company. Thank you.